Welcome back to Beyond the Sold Sign Real Estate Unplugged. We are your hosts and favorite realtors, Naya
and Lauren.
And we're so excited to be back with you all. Let's get into this listener's story.
I'm honestly confused and embarrassed. I applied for a mortgage, submitted all my documents, and then found out I was denied. I thought my credit was decent and my income was stable. What actually causes a mortgage application to get rejected? It's a great question. And believe it or not, this happens more than not. But I feel like you don't hear about it because you mainly just hear the people who are like, hey, I got approved for a mortgage. I just bought a house. But you don't hear about the people who got denied. This honestly happens a lot.
Yeah.
Unfortunately, but it does. So the main thing is a mortgage application, when you are getting approval, it's not just about the credit score. It's about an entire financial picture. Like there's a lot that goes into it. And a lot of times if there's one or two things off, it just will mess up the whole approval. So your lender's looking for consistency, stability, and any room for error, honestly. So I think that's the main thing. I think a lot of people just don't know about it.
And I would add, I think it's better to get denied up front and understand where there's the room for correction or what you need to do to be able to get the approval versus you just, you're approved and you getting further down the line when they're really looking at everything with a fine tooth comb. And then, now you're deep in it, you've got a house or, whatever. And now you can't get to the end of that process and get the keys. So, even though you're like, oh my gosh, I'm embarrassed, I got denied, know that there is opportunity to get it corrected. And it's better that you gave it a try and now you can understand what to correct versus you being later in the process.
Yes. Ooh, later in the process.
Yeah.
Imagine being under contract on a house and then it's like, sorry.
Yeah.
We only did part of this process, but now you got to do the rest.
Yeah.
So that is so much better, like Naya said, that you got denied. I know it doesn't feel good, but to do it in the beginning and now you can fix it. So let's talk about maybe some reasons why you would have gotten denied based on your question. So your debt to income ratio is too high, which that means is that you probably make great money, right? But what about your debt? Is your debt very high? So does it match your income? Because in certain things, when we're talking about debt, like your car payments, your student loans, your credit cards, lenders can get a little nervous because they're saying, yes, great, Lauren makes a great amount of money, but her debt is also right up there too. That's kind of a risk that they may not be willing to take.
Yep. A second thing that could result in a denial is any changes that you may have had in your employment and or income. So did you get a new job? Do you have commission or bonus income? And then do you potentially have self-employment that does not have enough history? And so all of these things don't mean that you can, again, never get it approved, but it may just require a longer period of time of history or some more explanation behind, how often you get those bonuses. They might have to take another step. That means you can't get approved today, but let's work on what is needed for you to get approved. And then for the new job, stability and longevity with one job is important too, normally 2 years. So there's probably just some more digging for that as well, or you may need to wait until you get to that 2-year mark.
That's true. And what if you go from a, what is it, W-2?
Oh yeah.
If you go 1099. Yeah. That right there can kind of push you back.
Right.
If you're going from a corporate job, if you have a corporate job and then you're like, I'm gonna go ahead and work for myself, open my own business. So now you're a 1099. That's a huge shift. So because you got to think, a lender doesn't have that stability anymore. They used to know what you're getting paid every 2 weeks, every month.
Pay stubs, automatic.
Right.
Now it's you get a contract or, a client that's paying this much, a client that's paying this much, especially if you don't have that history. They cannot predict what you're getting paid next month. That's going to, again, make them nervous or, make them need a finer tooth comb than what they're already using. So that may result in a more immediate denial,
Yep.
meaning there's some more work or more documentation or things needed.
Yeah, and I feel like too with the I think you mentioned like bonus or commission.
Yeah.
I'm thinking like, do you feel like that has a lot to do? I'm thinking like people who work in a restaurant and they have like servers or whomever in a restaurant, but you're getting some type of like whether your tips or your commission that you're getting, but a lender may not know what your tips are for every single shift that you work, so they can't really help and say, okay, I think you're going to make $100 this shift, but then, the next shift you come back, it may only be $25. It was a slow night. So that right there is, I think, a hard one too. Just it also depends on the type of job you have as well. So
yeah, they need enough to be able to predict like what it's going to continue to be to prove that you can afford it.
And that's to help you so that you do not get stuck in a situation or in a house that you cannot afford. They do not want to see you out. Like, they want to see you strive and they want to see you successful from the beginning. So they don't want to put you in a place that you're like, man, I should have not purchased this house, or I should not have done this. So they're doing it I swear, they're doing it for the best of you and your ability and what you can afford. So credit issues is another one, because they're not just lenders. They're not just looking at your score, right? You may say, I have a 700 credit score. I have a 620 credit score. Well, they're also looking at late payments. Do you have any late payments on your credit? What about collections? Do you have any collections sitting there? High utilization, meaning your credit cards, they are well over 30%. Like, you're using well over 30% of your credit card. And then recent history, there are a lot of things that go into effect when it comes to your credit score. And don't think that the lender is just going to pull your score and just say, oh, okay, great, they have this score. They're going to look at your whole credit. They're going to look at everything. So I just want to make sure you know that. It's more of a pattern than it is just numbers.
Yeah. All right. And then, speaking of this debt, one thing that's really important is that you cannot be collecting new debt during the process. And so if you have a new car, furniture financing, new credit cards, or you've recently co-signed for someone, those are all things that are just no good for getting a good approval. So this is something that you don't want to do right before you're applying for a loan, and especially once you've gotten your pre-approval for the loan and at any point during the buying process. These are things you want to stay away from. So just be mindful of that. Some people will ask, oh, do I get the car before the house or the house before the car? Please, as much as possible. And, everybody's got different extenuating circumstances, but as much as possible, try to get the house first before you do the car, before you open any new debt, because it's just going to, although you may be able to afford both, it's going to still deter and delay, and on paper add another debt into what you already have. And they cannot predict they can't predict the, I guess, stability, because it's a new debt. So really, really, really try to stay away from new debt before you apply for a home loan and during your process in getting the home after you've been pre-approved.
Yes. And that furniture finance, that furniture financing, we hear this all the time with buyers. Like, okay, can we go ahead and we want to get a new washer and dryer? We want to go ahead and get our couch. And we're like, that's great. We want you to do all those things, but do not put it on a credit card. Like, do not open up financing when you go to the store and they say, hey, you can get 0 interest for the next year and a half. Do not open that. Not yet. Like, wait until you close. Like, you can go the minute you have them keys in your hand. But please just wait it out. If you can pay cash, do it. If somebody else wants to do it for you, fine. But don't do it. Do not. When you said furniture, I was like, oh, I cannot wait, because that is something that people always ask us. So
that furniture is going to be there.
Yeah, it's going to be there.
Please believe.
And then you maybe not enough cash in your account. So we call it reserves. So if you don't have enough cash to put down your down payment and or your closing costs, that right there may tell the lender, okay, how are they going to afford their mortgage payment if they don't have enough money to put down to start the process? So that may also be a reason why you got denied. They don't want you broke after closing. They want to make sure you have some money sitting there so that after you do close, like, oh, great, we know that they have at least 2 or 3 months of mortgage payments in their reserves. And again, doing it for the best of your interest.
Yes, absolutely. And then, the last thing that I would say is one reason you might be denied is if you have inconsistent or unverifiable documentation. So any missing paperwork, unexplained deposits, or inconsistent income can, pretty much stall or just completely stop the loan approval process for you. So money has to be able to be clearly traced. They have to be able to know where it's coming from, that you're getting it again. So the money has to be able to be traced. If they cannot trace it, it does not count. It does not exist. They cannot prove that this is a viable source of income if it just came out of the wind from nowhere. So same thing with documentation. Be sure that you are providing the verifiable, accurate documentation and whatever documentation that they're asking for. So you'll see when you're being asked to provide the bank statements, they will say the full statement, not the first page. Okay, we know the first page has a summary. They need to see the full statement, every transaction. I know it feels like they're in your business, but they need it. That's just what it is. Okay, so they need to be able to clearly trace all those funds. They need the right paperwork. And again, do this heavy lift in the beginning so that the rest is much smoother and you can kind of just get that off your back. Okay. They know you went to Chick-fil-A 30 times in a 30-day month. Okay.
Just write the explanation. Okay. Just tell them why. Okay. They're going to ask, why did you pay somebody $7.35? Just write it. We just write that.
Yeah.
It's just little things. And you're like, why are they asking?
Because they're going to ask sometimes, why was this money sent? Or where did this deposit that you got? Or it could be $1,200 and you're like, that was small. Or, I helped a friend with something or somebody owed me money from 3 years ago and they just got it back to me. And that's what the $1,200 was. Just let them know that, the more upfront that you can be with information to help things get verified and there be clarity and understanding and tracing where it came from, then, they can work towards that approval for you.
Yeah, absolutely.
Yeah.
And just a reminder, a denial does not mean no, right? It doesn't just mean no. It just means not at this time, not yet. And maybe also not this way. There's other creative ways to get pre-approved. So we don't want you to leave out of here thinking man, just because, they denied me, it's automatically a no. It's just a no right then and there at that time during, at that moment. But you can always readjust, do some things, go off of maybe some of the things that we spoke about and, change it up and we'll definitely get you approved.
Yeah.
Sure.
And I think what's important too is if you're working with a great lender who we have a lot of great lender partners, they will be able to tell you and help you figure out and pinpoint which one of these things is causing the issue and what you can do to fix it. So again, sometimes somebody's ratio is too high. Okay, the lender might have been able to say, if you can pay XYZ amount on this credit card bill, and then, let's wait 60 days for that, cycle to be able to update your credit, yada, yada. Now you're good to go. So it could be something small. And if you have the right realtors and lender partners, you can get that yes, just with a little bit of delay.
Yeah.
All right. Well, thank you all for joining us for another episode. We hope that you've been able to learn and take something away from this episode. Make sure that you like, comment, share, and subscribe. You can find us on YouTube, on any podcast platform, and on all social media platforms as well. See you next week.